This is Alan Bush with Archer Financial Services. We are seeing stock index futures trading higher today. Some media reports suggesting that stock index futures are better, basically due to an improved situation in the Eurozone. But we're thinking that if that were the case, we would see the euro currency higher, which in fact it is lower. So we're thinking that there are some other factors supporting stock index futures, and we believe that traders are focusing on the increasing possibility that the Federal Open Market Committee will come in with additional accommodation, possibly in the form of a third quantitative easing program. Now, a logical time for that would be at the July 31st, August 1st Fed meeting, or possibly at the December 11th meeting. Normally, the Fed seems to be reluctant to do much in the way of policy changes during an election. So those are the two likely times for the Fed to come in with any additional easing if they have any intention of doing so. Recently, a Reuters poll suggesting that 70% of the economists surveyed believe that a third quantitative easing plan is in the works. We believe that is the case. We've thought that for a while. So this, I believe, is the dominant influence that will take stock index futures higher in spite of all the other problems we have internationally, especially the current situation in the Eurozone, which we believe is deteriorating. So from here today, look for better prices in stock index futures and probably higher prices longer term. Over in the currencies, bullish on balance news for the euro currency. We had the European Union indicating that they will ramp up loans to Spanish banks as far as the time schedule. We had Italian industrial production better than expected, and yet the euro currency lower. So the fact that we are trading lower in the euro currency on bullish news suggests that lower prices are in store for that market. So look for lower prices from here in the euro currency. Don't forget, we are not that far from a two-year low in that currency. And I think that ultimately we will take that out, and ultimately I think that we will see a test of the 120 area in the euro currency. The commodity currencies, the Australian dollar and the Canadian, trading a little bit better, being supported by a firmer tone to commodity prices. Also, we are seeing a better stock index futures market that's supportive. But I think that these gains will probably not follow through today. In fact, I think we can see a move down to unchanged or lower on the day today in the Canadian dollar and the Australian dollar. Longer term, I think these markets are headed lower. As far as the credit markets, we do have supply an issue. We have $66 billion in Treasury debt to be auctioned this week, with some paper to be sold today. So supply a negative, but I think longer term the dominant influence is going to be easier credit from the Fed. And I think that will be enough to take the credit markets to potentially new highs for the move. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.